Hello and welcome. My name is Amit Maurya and this is my YouTube channel, and I want to make an update to my last video of Worhty Capital. Since then, in my last video, I made an account. I put in $100 and I wanted to see if they got my money. Basically, it took them 5 days, business days, to transfer my money from my bank account to their account. And then as soon as they hit after 5 days, on the 6th day, every day they are giving me essentially 1 penny, I guess. So right now, day 2. So I own 10 share current moment. And let's look at their interest. They are giving me 5%. And it's supposed to be somewhere here. I can withdraw. I can look at the document. All right. Interest report. Here's their daily. So this is the day 2. Every day I am essentially it's still penny, right? Because it's not 10 cents. It's a penny right here, even though this might be 4, so it's still penny. Eventually I'll have more, but this is one of the updates that I wanted to make. And since then I have done a lot more research into this company, and I wanted to share my research and see what you guys think. So on their website, they are very kind enough to link SEC and their team member. So first thing I'm gonna do is show you the SEC filing and something very important of how they are investing our money as an investor. So the money that I just gave them, the $100. So this is a bit old. This is, I think, in last year or so. So they invested our money. So they bought REIT, they bought E-REIT, collateral real estate loan, public preferred stock, corporate bonds, certification of deposit, U.S. Treasury, and asset-backed security. So asset-backed security, they only doing that with 29.3%, so 30% give or take. Rest are not. So I just want to make sure that people understand. But they're doing U.S. security, so that gives them another 22%, right? 30. So 30%, 20, so that's 52%. At 52%, you can say, okay, this is still not that much risk. They can pay us off. Certificate of deposit, that's just CD. They're doing 0.54, so that's, I wouldn't even count that. Corporate bond, all right, this is still security. So this is still, if I was an investor, right, this is still low grade. Let's say they bought a junk bond. So that's about 27%. So we were what? Let's look at it. Sorry, I'm really horrible at math. So 23.3 plus 22.4 plus 27.5. So that's here. Public preferred stock. Now this is where it starts to get a little bit not so. So 80% are, I would say, fine. These are in the stock market about 5%. What is this? Collateralized real estate loan. I think that's how you say it. And REIT and E-REIT. So I'm not sure what these are all about. I am familiar with REIT. I am involved in a couple of the REITs, so I think it is the same thing like Nico, Fundrise. There are a bunch of others. I'm just literally drawing blank at this point. Or you can buy the stock traded E-REITs. But this one, so I guess somebody's putting some kind of collateral, their house or something, to get a loan, I guess. So yeah, so essentially 20% is a bit. But here's the biggest problem. They lost $11,852. So I'm not sure what's going on here. So that's one thing that I wanted to show that was on their website. And the way I got here is they're on main site. When you click on it, this is where you will get and then I clicked on one of these, I think index, and then image 002. All right, so that's how you can do it yourself. And then next one is obviously a research tool, Google Play Store, how many people have installed and how they like it. There's about 102 people so far who have installed their app, and so far, you know, that many people who are having bad problem. But let's look at the review. Oh, well, I don't want to do review, but I wanted to show the reviews. That way I can look at 1-star reviews. Okay, fine, great so far, 1 cent per day, just like me. Okay, so they gave some information, updated July 8th, their app information. All right, this one is another thing that I found interesting on SEC filing. There was about 630,380, so about $600,000, $630,000, right, is in question. That oversubscribed bond of offering, they claimed that was because of code error, and they have refunded all the money, so that's good. So they also disclosing that. I'm not sure how you can have oversubscribed bond, and yeah. But the next thing I did was Google every single person on their team who they say they are. So if you go here and go to their mem website, come on, delete. One second. Finance. Worthybond.com. Go down, all the way down. Should be able to see team right here. So I started Googling everybody. That's first thing you should do. So I Googled Sally Outlaw. C is, actually I did YouTube. So C appears in, this video is old actually, that's supposed to be in 2019, but I think somebody else, whenever they posted, and she goes over her idea and what it's all about. Here she is giving a lecture on the Worthy bond on August 16, 2016. At that point, I think she still had an idea, and she was just trying to start out.
Worthy, and we're a mobile investment app. I will go a little bit into detail on the app. In a nutshell is, as we say here, to strengthen our communities and build a better economic future by investing in each other. Increments is what we call a roundup, and I'm sure most of you are familiar with how that works. We basically round up your purchase, tell everyone about the benefits, and have them benefit from crowd finance. So the app was a way that I thought, you know, if they download the app, they can participate in our crowdfunding community.
All right, so that's her. So let's look at information about her. She has about 500 connections, right? She's the founder. What else? 4 years and 7 months since January of 2016, and peer backer. That was before that, 6 years, and you can read about her. All right, so I did the same thing with Alan Jacob. I was able to find Alan Jacob right here. He is with the executive vice president, and he also does the, I guess they have two things, Worthy Lending LLC and Worthy Financial. So I'm not sure. I think they're using interchangeably these two companies, right? And then there's another person, Zhang Sento Funny. Where is he? Here's her. She's the chief administration, like they said. She was with Banking Central, with Bank of America. 89. You know, you look at her connections. The only person that I had a hard time was with Joseph D. Ariel, because I actually found kind of violation on this person. He's 47 and he was involved with basically, I think he was in a company where he needed to be independent and he did some kind of audit and he wasn't really independent, so SEC came out and they served all these people a notice. I don't think it's much of a deal. I read through the violation, and as long as they pay the fine, they should be fine. I think, that's pretty much it. That was the whole point, and I can't really find information about him much, so yeah, I'm not sure what to say on that. Jim, I was able to find him. James Enrichen. Yep, it's Jim. I think this is two different names. This is a different name. He called it James here, and he himself calling Jim. So, not sure if they're supposed to be interchangeable. But that's two different names. Maybe it's a mistake. All right. So that's that. And then, what else I have found is, let's close this. Let's talk about, we already talked about the YouTube. Obviously, like anything, you should always read what is going on Reddit. It's a pretty interesting platform because people give their opinion, and so far it's just normal stuff because the lack of transparency, and SEC file isn't really, filing website is not that helpful. Okay. People are saying they're losing money, so that's one of the concern. I hope they're not losing as much money, because how long can company keep losing money before they go out of business? That's my major concern here. They do seems to be, there's another company that the CEO mentions here. What's the name? Sally. She said Street Share. Let's spell it Street Share. So she got that concept from this. So I think they are somehow involved in this company as well. This is the same thing, almost 5%, and they actually invest in veteran-owned businesses. All right. I in fact actually just made a profile. I just wanted to see what's going on and put in that $100 again just to test it out. I might take out all my money, FYI guys, if I see anything changes, any negative news. But meanwhile I'm gonna have it $100. I don't think it's gonna affect me much. So yeah, I think this is where she's getting the information from. They've been a little long. Street Share been a little longer than the Worhty bond, but I don't think Street Share is doing much of a advertisement. So that's that. And here's their public information, how they work, which is the $10, 5%, right? And then they're saying invest as little as $10, flexible secure payment option, portfolio online, no purchase fees charged. Worhty website. Our businesses is provides 60% of asset, right? Loan to manufacturer, wholesaler, retailer, secured by inventory, purchase order financing. 40% we may also provide secured loan, other borrowers acquire equity interest, real estate, which is true. We just showed you real estate. Make fixed income investment, provide amount, nature of such activity, right? All right, so here's an interesting thing. Beginning in September 2008, we began deploying capital we have raised through the sale of Worhty bond. As December 2008, we have entered in 3 loan receivable agreement for agreement of 100. Yes, 1.2 million. With a small business borrow, the loan pay interest at bearing rate 0.62 per month to 1.5 per month, and collateral management fees ranging from 0.5 to 1.1% per month. Loan agreement have customary loan origination fees, which have been, so I'm not sure if they're not making that much money, how are they making money? So invest in. So January 19, they invested this much money. Agreement is small. This thing they invested in again. Yeah, so this is mindful. All right, let's look at here. Sally Outlaw, nature of beneficiary ownership. So C owns 35% of the share. Jacob owns 16. 51 is allocated directly group 2 persons. And then there's Rodolph, Jack, Andrew, these people who are the owners. So I guess we fall in under the 51. Okay. Page. The Salzburg company is board of director. So they also sitting here. So let's look at their, I guess this is Worthy Peer Capital subsidiary balance sheet. I'm gonna try to do my best. So they have this much cash, prepaid expenses, interest received, this much. Okay, total asset. Yeah, this makes no sense. I can't read balance sheet. I mean, I can make sense out of it, but to me this is not making much sense, honestly, because I suck at reading balance sheets simply. That's why I like to use software. Somebody else tell me what's going on. But I have taken accounting class, so I can I have a general idea how balance sheet looks like. Yeah, I mean, this is pretty straightforward. Current liabilities, they have 1 2 10 lakh, so 2.4 million, right? They have a liabilities, bond liabilities, they have 25,000. Account payable is about 4,000. Accrued interest, I think this is where we are in 24,340, or the ones that I think this is the money they have borrowed, so from us. Deferred revenue, so this is that they have deferred $38,000, and current liabilities are 2.5 million. So that's a huge increase in 2017 to 2018. Total liability 2.5. And shareholder equity, preferred stock par value. Okay, that shareholder deficit. So there you go. See, anytime you see this parenthesis, that means that they're losing money. This right here. So that's causes for concern, but I don't know. Honestly, I can't tell if they're losing money or they're making money in this case, because I don't really understand. This is too much data simply, but somebody do understand, let me know. What am I looking at here? But net loss, right? What I think is they're losing money. Right, everywhere I see loan distribution, they gave out this much money to their loan. So cash at the end of the year. Okay. So they had well over $1 million. So 1.3 million in cash. And cash at the beginning of the year, it was 57,000. So they really increased a lot of money here. Providing by financing activity, 2.5 mil. Net cash provided by here. So, well, somewhere they're losing money, somewhere they're gaining. So I guess they are making money in a way. But this is for you guys to decide, right? I am not licensed, neither am I professional. But yeah. Here's net operating loss. There you go. This makes more sense. I like looking at a small number. Look, $48,000 loss. Valuation allowance, 48,000. Net difference, nothing. All right. Expected previous benefited statutory rate 21%, from 35 to 21. So I guess they are going down. Change in federal rate, 3.5. Total previous benefit income. yeah, guys, so that's what I got. So far, I mean, I looked at other YouTuber in the last 3 years. They've been getting paid. I wouldn't put more than, if you have a lot of money, do not put more than $10,000. If you want to try out for a short period of time, so that you can see the platform. I think it's a very interesting platform, but until this website comes out with a lot more transparency and easy to read and easy to understand, I would not recommend putting a lot more money than, let's say, more than $500 or $1,000. Or if not, you can put a little bit more money, but take it out in 1 or 2 months or 3 months. All right, guys, thank you.